Hey everybody, welcome to this video for Business Math and Calculators. This is the video for Module 42, which deals with homeowners insurance. So we are going to just look at a couple of quick problems dealing with figuring out kind of what your monthly premiums are and things associated with deductibles and other fun things like that. So with that, let's go ahead and jump into those sample problems. Alrighty, so we're going to talk about homeowners insurance, which if you are purchasing a home, definitely an important part of that process that you need to be aware of. Obviously, when it comes to buying the home, we've talked in previous videos about figuring out what your monthly payment is with regard to your mortgage, the principal and interest that goes into that. But other things you need to budget for when you're thinking about your budget, your monthly payments, is your homeowner's insurance as well as the property taxes and things like that. So with that, let's just go ahead and jump into a couple of sample problems and we'll go from there. So in this first problem, Izzy owns a home. The annual premium for her homeowner's insurance is $1,832. How much does Izzy need to set aside per month to cover the annual premium payment? So pretty straightforward. Generally, when you go and get homeowners insurance, what the company will do is they will quote you an annual premium. They'll tell you it costs X amount of dollars for the insurance for the entire year. But a lot of times people, rather than paying it in one lump sum, will decide to use, like some sort of payment plan, like a monthly payment sort of installment plan to cover that premium when all's said and done. So in this situation, that's exactly what's going on. We need to figure out what the monthly amount needs to be that Izzy sets aside for covering that annual premium when all is said and done. So basically, it's a one-step kind of problem. Since there's 12 months in a year, we're just going to take the annual premium and divide it by 12. And so in this situation, Izzy would need to set aside $152.67 each month to pay for the annual premium. Now, what a lot of situations will do, especially if you have a mortgage, is they will lump in your insurance premium payment with your monthly payment, and they'll put in what's called an escrow account, where then the insurance is then paid out through that account. You make payments, and the bank kind of takes care of all of that stuff for you. So it might be a situation where you actually don't cut a check for this actual amount. It's lumped into your mortgage payment. So just be aware that when you are budgeting, that you do need to account for that even though your mortgage payment might be, say, $800 for the principal and interest, you might have this amount added on to cover the homeowner's insurance portion as well, to make sure that you're covered in that respect. So just be aware that that's something that you want to account for when you are buying and owning a home. Let's take a look at our second problem. In this situation, Randy has a homeowner's insurance policy with $250,000 in coverage. So basically that means that's kind of the limit that the insurance will cover up to that amount. His deductible is $1,500. Now the deductible basically is an amount that the policy owner, so in this case Randy, has to pay towards a claim before the insurance kicks in and pays the remaining amount. All right. So a lot of insurance works this way, whether it's homeowners or auto insurance or life insurance or other insurances and that kind of stuff that are out there. So just be aware that the idea of a deductible comes up in a lot of different places when we're dealing with insurance. Now, in this situation, after a storm, Randy discovered damage to his home, and the estimate for the repairs was $32,750. How much will Randy pay toward the repairs, and how much will the insurance company pay? All right, so pretty straightforward. I kind of hinted at the first part of this. How much will Randy pay towards the repairs? Well, Randy is going to have to pay the deductible. All right, so he's going to have to pay an upfront amount of $1,500. The insurance is going to then cover the balance of the claim. So to do that, to figure out the insurance company's side of things, we're going to take the total amount for the repairs and we're going to subtract off the deductible. And so when you do that, you end up with a balance of $31,250. That's what the insurance company is going to pay. So to cover this entire claim, Randy pays the deductible, the insurance company pays the rest. And there you go. All right, so those were just a couple of quick problems associated with homeowners insurance. Nothing too complicated in terms of what we're getting into in this course and in this video. We're just kind of focusing on, the types of things that you might have to calculate as a homeowner. So figuring out like what your monthly premium is, what you have to pay and budget for. Also figuring out what you might have to pay in the event of making a claim when there's damage to your home or other situations that might come up where the insurance or the homeowner's insurance kicks in. So hopefully these examples just give you a couple of quick ideas as to how that process works. If you have any questions on things, please do not hesitate to ask. I'm always happy to help you out. Reach out to me by phone or email or text or drop in during office hours, whatever works best for you. In the meantime, I hope that you have a great rest of your day. Thanks for watching this video, and I will catch you in the next video.